Well, joining me now with more on these markets is Kevin Mahn. He's President and Chief Investment Officer at Hennion and Walsh Asset Management. Kevin, it's great to see you, especially in the new year.
It's great to be back. Happy New Year, Kristen.
Happy New Year to you as well. What do our viewers need to know as we start this new year in the markets?
I think the beginning stages of the new year have provided investors with a glimpse of what 2025 may look like overall. More uncertainty, more short-term bouts of volatility, some rotational shifts in terms of market leadership, and overall, what's likely to be a good but not great year for the stock market.
Of course, the market coming off of 2 years for the
Yes.
S&P of 20% plus gains. I think 55% is how much we had seen it gain from 2023 to 2024. Kevin, talk to me more about this sector rotation that you anticipate.
And going back to that 2-year theme, there's been 9 times since 1950 when the market has rallied by 20% or more in consecutive years. The good news, Kristen, is that the following year has been higher in 8 of those 9 times. The bad news, perhaps, it's only been higher by an average of 3.6%. So investors need to be a lot more selective to find those pockets of growth opportunities. And I think you're going to see them in some smaller cap areas, such as regional banks. Big banks are off to a great start to this earnings season. I think that trickles through to the regional banks. How about small cap biotech? I do anticipate a pickup in M&A activity in the new year, and that's going to benefit those smaller cap biotech companies with all of these innovative healthcare solutions.
Certainly the biotech space has been waiting perhaps for a little bit of buying activity
It's
of
coming.
late. Kevin, of course, 3.6% is pretty much what people can get in a high yield savings account now. So you mentioned obviously being able to weather some of the storms if we do get bouts of volatility, all in higher. How does this economy look to you, and how does that shape the Fed's rate policy?
Yeah, I think right now the economy looks relatively stable. If you look at the Fed's most recent summary of economic projections, they're expecting the economy to slow to just 2% growth this year and continue at that 2% rate all the way through the end of 2026. Still growing, but yet slowing. I think what we learned, at least over the last 3 days, is that we saw cooler inflation prints and a relatively robust jobs market. If that holds true, the Fed doesn't need to do anything right now. In fact, I don't think they do anything in the first quarter of 2025. And they're only forecasting 2 rate cuts this year of just 25 basis points each. I think that's going to hold to be pretty accurate.
Yeah, we've seen traders certainly adopt that notion as well. Other themes that you're anticipating for 2025?
I'm not abandoning the AI revolution theme just yet. I don't think anybody should. I know everyone wants to talk about NVIDIA, but there's plenty of other opportunities within the AI ecosystem. Kristen, whether it's related to the software companies, how about the data centers, the cooling solutions that those data center needs, and the tremendous need for energy that those data centers occupy, whether it's electricity, natural gas, or now, as we're finding out, nuclear power. And all of that generally comes from multi-utility. So look to lean more into the utility sector in the new year as well.
We have an IPO here at the New York Stock Exchange today, Flowco, an energy provider that we'll see ring the closing bell. Hopefully some price opening action about midday or so. What does that signal to the strength of the market?
I think it's just another example that there's more optimism in capital markets in the new year. I think you'll see more IPO activity. I think you'll see more M&A activity. And I think you see this overwhelming, resounding notion that the economy should grow from here. It's just a question of how much it's going to grow. And I think investors do need to temper their expectations for how much the stock market can deliver in a third year following 2 consecutive years of 20% growth. But if you're in an environment where interest rates are coming down, inflation is moderating, and the economy is still growing yet slowing, that's a pretty fertile ground for both stocks and bonds.
Are there certain stocks on your radar?
Yeah, I'd say there's 4 that come to mind. First, as it relates to the AI revolution, a cooling company called Modine Manufacturing. As it relates to aerospace and defense, we're going to see more and more defense spending. How about the largest defense contractor in the world, Lockheed Martin? Smaller cap biotech, I like Axum Therapeutics. And then finally, around smaller cap regional banks, I like a company called Webster Financial. They have a dividend yield of just under 3%, a PE of just 10, operating and headquartered at Stamford, Connecticut. I see them as a potential consolidation candidate.
Interesting. And as this earnings season rolls on, Kevin, any nuggets that we can perhaps glean as to where certain sectors or even names might be heading?
Yeah, the most important thing coming out of this earnings season, and right now it's forecast that there's going to be an 11.7 year-over-year earnings growth rate for the S&P 500. If that holds true, that's the greatest year-over-year earnings growth rate in 3 years. But we need that earnings growth not just to be led by the Mag 7, not just to be led by the information technology sector. We need it to expand. And as earnings growth expands, the market rally should expand as well.
Of course, our hearts go out to everyone impacted by the wildfires. We haven't seen any sort of major market impact, but is there anything investors need to know as we see events like that transpire?
Yeah, I think in California, and again, my hearts go out to them, my sympathies for all the families that are affected. I certainly have colleagues and people in the industry that have been impacted, and it's terrible. But we'll look at those utilities that are impacted right now, perhaps some of the municipalities overall. Look at the insurance companies. I understand it could be anywhere from a $20 billion to $30 billion impact in terms of total losses that's going to be covered. But I do anticipate the federal government, local government, and these insurance companies to be able to help those affected. And it's going to be a long road ahead for these people that have lost everything. But I do anticipate they will recover.
Kevin Mahn, President and Chief Investment Officer at Hennion and Walsh Asset Management. Kevin, thank you.
My pleasure, Kristen.